Hello, everybody. Hi, everyone. Welcome to Friday. Looking forward to our session as always. Let me get my share going here. There we are. Looking forward to talking about what's going on in the market right now. As always, it's Friday. That means I've got a lot to go over. We can talk about have a few positions coming up here on expiration today that we'll be able to review, as well as some things coming up in the weeks ahead. So plenty to go over. I also expect that we will have some time as well to talk about stocks that you may be interested in. So looking forward to trying to have a live discussion. If you have comments or questions during the session today, just ask you to use the chat area over on the right hand side of the screen. Go ahead and post a message there. Everybody's going to see it, but I'll pay attention to that and try to address questions or concerns. Add comments from that panel as you have them. So that way we can try to get as much interaction going as possible. All right. Really quickly, just not to go into a ton of detail, but I just want to emphasize a couple of ways that you can interact with me as a community. Tried to set up a couple of different ways for you to contact me or to interact with the group. First, if you want to message me directly, there's a couple of simple ways. The most direct way is with email. I've posted my email address in the chat, rebelincomesystem@gmail.com. And that'll give me a way to respond directly to you on an individualized basis. Depending on whether you are on Discord or Substack, you can also use a couple of different methods to communicate with me and with the group. I'm on the Discord server at the moment. The open discussions channel is an area that I've created for us to share comments, perspectives, questions as a community. Feel free to use that. You can message me there. I pay attention to the thread throughout the course of the day, and we'll try to respond as soon as I can. You can also message me directly in Discord, just by using the direct messages function, and just select me and send me a message, and I will respond as soon as I'm able. If you are on Substack, I've set up a chat room again for everybody in the group, and this is something that I want to try to maintain as another area where all of us can interact with each other and share perspectives and try to have a lot of interaction about what's going on in the market and some of the different things that you may be paying attention to at any given time. Okay, enough of that. Let's go ahead and dive straight in. It is Friday as always. That means that there are weekly options that we have to look at and pay attention to see what's going on in the market right now. It's been, as always, an interesting week. Let me just switch over here. Let's take a look at the big picture. It looks like we may be finally breaking out of the consolidation range the market has been hovering in for most of the past 2.5 months, and that's interesting. Let me just zoom in here a little bit. Open up my drawing tools, and we can see a push above this resistance line yesterday, along with a little bit of a kind of a doji formation for today's movement so far. But it's still holding. It looks like above that resistance line, very near to the very top of the most recent range. Looks like that was earlier this month. A little bit above, maybe around 6120. So this is the S&P 500. So it looks like we may be breaking out to the upside. Let's take a look over at the, let's switch our view here, take a look at the NASDAQ. And we have kind of a similar thing. It's not quite Not quite above yet, but getting very, very close. Certainly picking up some bullish momentum. About the Dow, still a little bit, staying a little bit range bound. So, you think this is bullish? Do you think this is more just more of the same? Is maybe the break that I talked about with the S&P 500? Is this maybe a little bit of a fake out, kind of like what happened here? We saw a push temporarily above the range, and then it dropped back down and started to tighten again. Possible, but we do see the market certainly trying to be bullish. Some economic indicators this morning came in showing that maybe the economy was a little softer than anticipated or predicted, and so that may the market, as always, is trying to predict and anticipate what the Fed is going to do next. And so that means that trying to buy the rumor. Looks like the market is trying to bet on the idea that maybe the economy is a little bit softer, and maybe the Fed doesn't need to hold rates at their current levels as long as they anticipate. Maybe there will be a reason to cut. Who knows? That's going to have to play out a little bit longer. Gib, great comment here. Besides the fact it doesn't pay dividends, would TTD have been a candidate on Tuesday? I got to be honest, this is a stock that I don't follow actively. So I would have to say no. Again, the primary disqualifier here is the fact that it doesn't pay dividends. That's just going to be a non-starter for me. Doesn't matter what price the stock is at or what the trend looks like, how strong the fundamentals are. If they're not paying out a portion of their cash to shareholders, if they're not focusing on returning value that way, then that's just not even going to happen. This big drop, technically speaking, could be interesting. I'm not sure exactly what's driving that, but I mean that's almost a 30% drop just in the last 2 days, from about 120 to now pushing down near 80. So there's obviously something behind the last earnings report the market is not taking favorably. I'm not sure what that might be. So, Gib, if you've got some more, this is a stock you're following and tracking, you've got some other insight, feel free to share. Again, this is not one that is on any of my watch lists just because it doesn't pay a dividend. So I can't speak to any other fundamental strength or weakness. Got obviously a lot of bearish momentum right now. There is an idea, technically speaking, when gaps form like this, that the stock will very often refill at least half of that gap. And so if we start from 120, go down to 80, the midpoint there would be about 100. That's assuming that the stock has support, very solid support, right around $80, which right now we can't say because this was a very strong downward day yesterday. Excuse me. Let me get these out of the way. And today we're seeing a continuation of that downward momentum, and the stock is down at the bottom end of its range right now. So I'm not sure where support is going to land right now for TTD. Until it does, you really trying to predict any kind of upside back towards filling half of this gap is not just poor analysis. It is absolute speculation. So I would wait to see where this support starts to form. Look for a pivot low at some point. It could be around 80. Looks like possibly down here around 77, 76. If it does, then at that point you can you can look for that 50% possible fill in, but it's got a lot of that's a lot of distance it has to make up in order to start to fill that gap. And there's again, not knowing, I'm just looking at the chart. I haven't looked at the news or anything on this, so I'm just going in blind. I'm just saying that right now it would be hard for the stock to fill that gap anytime soon, just because of the strength of bullish momentum. A 30% drop in one day, that's pretty serious. So I know that probably doesn't. That's a long-winded way to not really answer your question, Gib. I'm sorry. But it's a great question. I appreciate it. So, all right, let's go ahead and let's talk about some of the things that we do have on deck right now. There are a few positions that are set for expiry today. We'll start with the put sale on Halliburton and then take a look at our covered calls on Nike and on LRCX. So for Halliburton, this is a trade that I placed at beginning of the month. Actually, this was just excuse me. This was just last week's put sale. About a 9-day trade, selling the $26 strike price, dipping my toe back into the energy sector a little bit. I have a long position right now on Devon, having been assigned that one at $39.50 in November. And so I already have that one. I want to be a little bit careful about going too heavy into energy right now, but there are some stocks in this sector that are interestingly undervalued, and Halliburton's one of them. And so this was 1.62% income generated in terms of yield for 9 days of time. I really liked that setup. Let's see where we're at right now. And then Barry, I'll get to your comments. So give me just a moment. Oh, geez. There we go. Halliburton. It's just a little bit above 26 right now. It is. We zoom in here a little bit. It is having a mostly bearish day today. Got a little bit of a hanging man candlestick forming here with pretty strong support a little bit above 26. So all things being equal right now, at least, it looks like this position might go ahead and expire worthless. It could pick up some momentum in the next few hours, of course, and push down below 26. Oops, I thought I still had my drawing tool. Sorry. Could push down below 26 and still see me assigned the position, but as of now, it looks pretty good. And when I say pretty good about not being assigned, that doesn't mean that I'm afraid of being assigned. In fact, I don't think that being assigned is necessarily a bad thing. But in this case, it does look like that option is going to expire. I'm going to go ahead and get the $5,200 that I put on reserve for my 2 contracts on this back, and we'll see what happens. Now, just in terms of comparison here, remember on this one, I brought in 42 cents, which doesn't sound like a lot, but when your strike price is $26, then that still works out to a pretty nice premium, especially when you can do it in 9 days. Take a look at that option. Here's the $26 put, which the last trade on this was 2 cents. Current ask is 3. The details. got a little bit of activity going on in this one. So if you didn't want to do like I do, which is to wait for the option to expire, go ahead and let that play out, and then wait for trade settlement to take place on Monday or Tuesday. If you wanted to buy that back right now and not monkey around with waiting for the market to come to you, you could buy it back for 3 cents, hang on to 39 cents. Yeah, and Barry, if not assigned, you can potentially take that capital and apply it to more premium. Buying it back allows you to hang on to more than 90% of the premium, right? And then you could decide what you wanted to do with it next. Um, this is not a recommendation to buy or sell, as always, keeping my door swinging. But here's 1 week at 26. Bid is 25 cents, a little under 1%. That's not as elevated as mine was, but you can go out 2 weeks and get 43 cents at the same strike price right now. So that's interesting. Again, not saying that you should do it, but if you're in Halliburton, you're at the same strike price that I'm at. The advantage of buying it back right now, obviously, is that you get that capital back more quickly. Instead of having to wait for trade settlement to take place on Monday or Tuesday, as I will, your capital becomes available right away. So you could immediately effectively roll into a new contract, generate some additional income. If I were to use Halliburton again next week for next week's put sale, one of the things that I'm going to have to deal with is not only the fact that I have to wait for trade settlement, but also the time decay associated with all of the contracts that we're looking at here between now and when I place my trade. Not Tuesday when I post it, but Wednesday, which is the soonest time that I'm going to be looking at doing that. So we have the rest of today's time decay. You know, Saturday, Sunday. Remember, time decay isn't just when the market is open. It's an everyday thing, Monday, Tuesday, and then whenever I'm able to place the trade Wednesday. This is one of the other reasons that for a lot of people, rolling is so powerful and so important is by actively waiting. I'm purposely saying I'm okay with waiting another 6 days before I place my trade. And whatever time decay is going to do, it's going to do. It's fair to say that the strike prices, if the stock is basically where it is today on Wednesday, this 2-week contract is not going to be available at the same price, just because time decay will have eroded a portion of that value over the last 6 days. So my more passive approach, which again I'm okay with, I understand that this is the way it works. But that also means that I am actively sacrificing some of that premium to the effective time decay. I'm doing that knowingly. I'm accepting that as a reality of the way that I trade. Some people may decide to do different. Barry, I will let mine expire or be assigned. Take the Thomas method, and that's okay too. Again, if it's about simplicity, which is part of what the system I've built the system to do in my case, for a lot of different reasons. One is my ability to try to manage the system for the community, and to keep the information that I'm making available as relevant as possible, and just trying to maintain all of the different content demands along with my investing system. It's just easier. Plus, it honestly it puts less stress on me. And at this point in my life, I'm in favor of less stress. So, okay, Barry, you said I'm looking at a Tuesday cash infusion. Safe to say my CVS $60 and NVDL $55 calls will be called out, and probably my LRCX 82. Nice. So trade settlement for you, Barry, is going to be on Tuesday, and all of a sudden you're going to have a whole lot of cash available. That's nice. That's very cool. And that's not just talking about the premium you brought in, obviously, but being able to free up some additional cash and give you some additional financial flexibility, right, from being able to unwind those shares. I don't mind having holding stocks for a long period of time. Um, that's why I take assignments, but it also feels a little bit liberating when I get called out of one or a couple of them. So I know exactly what you mean, Barry. All right. Any other comments on Halliburton? Questions, thoughts on that? Go ahead and put them in the chat. I'm going to go ahead and start to move on, but I can easily bounce back to it as well. Barry, your HAL expires today, so that could possibly be actual cash. Awesome. All right. Let's go ahead and take a quick look at Nike. Now, again, this is another one. I was assigned shares of this stock in mid-January. I've used Nike on a couple of different trades and really been satisfied with the result. This trade, I sold the $74 strike price, being assigned at that point. So far, the income I've generated for 15 days of time was about 1.43%, which is okay. Let's take a look at where the stock is now. Okay, so stock has been, as we talked about last week, the stock had been picking up a lot of bearish momentum, but found pretty strong support down in this area at around probably 69, and has been rallying back up again. It is still below my $74 assignment price, though, so unless it picks up a lot of momentum today, Barry didn't take a loss on your calls. That's awesome, right? So this looks like, unless it picks up a lot of momentum on the bullish side, it looks like I'm going to hold on to these shares. This is a stock that does have some resistance right now at the 20-day moving average, which is just a little bit below 74. About 73.84 is, if you want to actually split hairs and look at the actual value. It's right here on the TradingView software. But so it's got to break up above that level, and that may be something that's going to hold it down a little bit. We'll see. But for now, it looks like I'm going to hold on to those shares a little bit longer. So this covered call is going to expire worthless. If this bullish momentum holds, then hopefully there'll be another opportunity for another covered call next week. And that's okay. Very awesome. CVS assigned at 59. I'm at 64, so you're way ahead of me on CVS, which I love. NVDL assigned at 52. That one's been really productive for you. LRCX assigned at 80, plus healthy premium on all the puts and calls. Yeah, exactly. And that's the point, right? That's why I love these option selling strategies so much, and why I like taking these assignments is that opportunity to turn around and start paying myself dividends with covered calls. I call them dividends. They're covered calls. It's premium come in from covered calls. But rather than just having to wait for the dividends to pay out and call that my only passive income source, why not generate those covered calls? It's just money that's waiting there, just sitting in the market waiting to be picked up. So no reason not to try to take advantage of that. Okay, that's Nike. Let's Barry's kind of champing at the bit here a little bit on LRCX, which I love. And this is the other one that is set for expiry today. Just like Barry, I was assigned also at $80 on this one. So I sold the $81 strike price, brought in a little under 4% for 9 days. That's pretty outsized premium, but that was pretty wonderful to be able to see and to bring in. Let's see where the stock is at now. Now, the other part of this that we have to keep in mind, and we'll see this with CVS in a minute, but keep in mind and remember when you sell a covered call, you are actively putting a lid on how much upside your position has. Whatever the strike price is that you sell on the covered call, that's it. So if you do like I do with a lot of stocks, you sell the same strike price that you were assigned, you end up with no capital gain. You're coming out sixes. So all of the return in those cases is what you're generating in your premiums and dividends if you happen to bring those in. I don't mind that on a case by case basis. I'm not always going to sell at the strike price that I bought at, because the objective, if you do take on obviously a long position, is to be able to close it with a profit, even if it's just a relatively modest one. So I do generally look to sell a strike price higher than what I was assigned at. But depending on what I'm seeing from the stock and what premiums are available at those strike prices, I'm okay in a lot of cases with selling the same price that I was assigned. LRCX in this case, though, I do have about $1 of capital gain baked in, and with the stock sitting a little bit above $82 as of now, looks like I'm in a pretty good spot. And so looks like Barry, you and I are probably going to get called out on this. It could obviously pick up enough momentum to drop back down below my $81 strike price. But so far right now, it looks like I'm going to be called out. And again, that's not only a nice result in terms of overall return, it's the capital gain plus all of the premium that I brought in, plus the dividend. I was assigned in October and was happy to bring in this dividend in December, and I'm okay with that. That's a satisfactory result for that trade. Like Barry was saying, I've been able to get healthy premiums on the put sale, on the covered call, and a little bit of capital gain as well. So Barry, NVDL has been fun. Maybe will be until it's not. You get these from time to time, right? And sometimes one of the advantages of maybe taking a little bit more active approach than what I do, a lot of our rollers, when they see a stock that they really like, and this is nothing about NVDL specifically, but just in general, when you see stocks forming these long upward trends, one of the differences between the approach that I take with my trades, my put selling trades, versus some of the more active rollers is that you'll see a roller place multiple trades along that trend line, whereas I may only do one, maybe two. I will do it as long as I still see good value in the stock, and if I can't find anything else that I think might be a better opportunity in the moment. But it's kind of rare that you see me actually ride an upward trend in most of these stocks. But if you're taking this more active approach and you're rolling these trades more frequently, you'll be able to do that. And so you'll be able to say, like Barry has, it's been fun, and maybe will continue to be. Yeah, this is another one that's picking up some nice bullish momentum as well. This is an ETF that's tied to NVIDIA, so this is one, again, just not a recommendation to buy or sell, but just kind of be aware. If you're going to play with this particular stock, keep in mind it's going to be tied to whatever NVIDIA is doing. Available at a lower price, but where NVIDIA goes, so does this. So, okay. Thank you, Barry. I appreciate that. These are fun until they're not, and that's one of the things you have to keep in mind if you are trying to kind of time the trade a little bit or play along with the trend. There is going to be a point where that stock is going to reverse, and you have to figure out what you're going to do after that. Same vein with my put sales. It's not a given that the stock is going to finish above the strike price that I was assigned at. So sometimes I end up sitting in stocks for an extended period of time, much longer than October, like I was with LRCX. And sometimes you just have to be willing to decide if you're going to be okay with writing that out, or if you need to make some other change. I have definitely used the Joe method with this one, but not your normal MO. Thank you, Barry. The Joe method being rolling a little bit more actively, buying back if you're a little bit profitable. At least 50% is the rule. Our friend Joe has been a participant in this community in the past. Has kind of been in favor of. If you're at least 50% profitable, consider buying it back, looking to either roll up to a higher strike price or out a little bit further in time. And then you just keep that going for as long as the trend persists. If the trend reverses itself, this is one of the caveats. If you are taking a more active approach, I take assignments and I ride downward trends in the stocks that I hold. If you are actively rolling these trades, that should not be your approach. The idea with rolling these trades, if I'm going to buy back when I'm at least 50% profitable and look to roll ahead, then that also means that if the stock makes a significant move quickly against the position, you also have to be nimble to close it out. You're going to take a few more losses this way than what you've seen me track. You'll take a few more losses, but you will also minimize those losses a lot more than what I do. Instead of something like I'll go ahead and just throw it out here. I'm in Paramount Global in the 40s, and now it's down around 11. I'm still in it, still holding tight. It's part of what my system requires. As long as the fundamentals are still there, a roller is going to move a lot more quickly. So the idea is to avoid those major swings to the downside that could expose you to a much longer downward trend risk. Okay. Enough of that. Let's just check in really quickly with this week's put sale. It was on General Mills, selling the 5750, trying to I'm trying to balance some of the volatility from a position like Halliburton, where it's in the energy sector. Trying to balance that with something a little bit more conservative in something like food products. And so I sold the 5750, brought in about 2.5%. This is a trade that went a little bit outside my normal rules, where I usually want to be selling as little time as possible. Excuse me. Where I want to be selling as little time as possible, I usually the maximum time I typically want to sell is 30 days. This one went a little bit outside that at 37 days, obviously, just because it doesn't. This is a stock that doesn't offer weekly options, and the premium, even for that extra week of time that I had to sell, was still pretty attractive. So. Barry, I will be done with this until it gets back down to below the 50-ish range. I'm going to go ahead and assume you're talking about NVIDIA on that one, Barry. Oops, NVDL, sorry. Yeah, you see a swing back down again. I think that would make sense from a timing standpoint, right? You get down here, back into support, you start to see some stabilization and maybe another pivot. that could be another good option. And I know it's kind of interesting to see the way that you kind of start to latch on to certain stocks, and when they work well for you, you can usually get you can usually get a few trades out of them that way, right? Um, and you start to get familiar with the way that their cycles run and the way they work, and you start to get pretty comfortable with it. There's nothing wrong with that, so that's kind of cool. Okay. So selling the 5750 earlier this week. Stock was, let me just move, let's zoom in here a little bit. General Mills, here's where I sold. And then yesterday we saw a big move to the upside, closing a little bit below 60, and now today pushing down to about 59. So far, so good. This is still, I've still got a month out on this one. So that means that I'm going to need to let this play out a little bit and see what it does. There's a few things that I really like about this. Yeah, you have to know when to step away from the table. That's right. Even on a stock that you're comfortable with and familiar with, there does come a point where you have to say, okay, I've probably done enough on this one. Time to move on to something else. That's why you don't really see me try to write a lot of trends. Is I don't want to get. I want to try to minimize that tendency to get a little to get too emotionally tied to these stocks. Even though, even so, there are a lot of stocks you see me use again and again and again. Dow is one of them. I'm having to keep my eye. I'm having to stay away from Dow right now just because the fundamentals aren't great for the company right now. They're going through some things, and that's shifting their value proposition. So even though the stock is way down below levels I worked with it in the past, I've got to wait until it turns around. On General Mills, though, sorry, going back here, I got off on a little bit of a tangent. A couple of things that I like about this. I've talked in previous live streams, webinars, whatever you want to call them, about a couple of different kinds of stock patterns. There's bullish level 1 and bullish level 2. Now, these patterns are defined initially by the 200 and the 20-day moving average, and that's why these are the two main moving averages that I keep track of on my charts. The 20-day moving average, in this case, clearly down, but more recently, as the stock has bottomed and started to show a little bit of momentum, it's started to form a little bit of a bowl. Not only has it leveled out and flattened, but even in the last few days, it started to point back upwards. That's really interesting. And then for the larger, longer term contrast, you have the 200-day moving average that is trending down. These are two really good indications. This is a really good picture of what a bullish level 2 pattern starts to look like. Now, bullish level 2 has a specific trigger. And it's not necessarily that the stock has to be above the 20-day moving average or below it, or that there needs to be a ton of major activity. What you're actually looking for is something that is very much like this candle. It's what's called a hammer. Now, this one looks something like this. It's a filled hammer, meaning that this was a negative day. Stock opened here. It closed here. Sorry, that's a bad C. So there's the close. It is down to the bottom of the range. The low for the day is at the bottom of the candlestick, and the high is right here. This would be called an inverted hammer because the hammer end, which is this squarish portion, is at the lower end of the range. But whether it's inverted or a traditional hammer where it's up at the top of the range is really less important. The important thing for a bullish level 2 kind of a signal is that this hammer has appeared. And this is usually a pretty good indication. Hammers are indications of stabilization on a very short-term basis. The reason for that, this hammer is a really good example of what I'm referring to, because after after opening here, the stock went higher up to this point, right? Then it wasn't able to maintain that momentum. It turned back down, went all the way to touch this bottom before rallying just a little bit into the close to finish right here at the closing price. Now, there's a very small difference between where it closes and where it hits the low, right? But that's still a form of support. On a one-day basis, it means that the stock hit a bottom, buyers started to go back in and started to push the stock back up again. And so hammers become really high probability signals that very near-term momentum is starting to shift in the opposite direction of whatever the current trend is. So if you have momentum very much like what we see right now, that is clearly bearish, the appearance of this hammer is it's not necessarily a guarantee that and certainly not a guarantee that the trend is going to reverse, but it is a pretty high probability indication that near-term momentum on the stock is going to shift back to the upside. And that's what's happened so far. So this is Tuesday, or excuse me, this is Wednesday when I placed my trade. Here is Tuesday when I wrote about the stock. It hadn't actually given that signal yet. That came up on Wednesday, and since then, this would qualify as a pretty good bullish level 2 kind of a trade. These don't happen a whole lot, and I don't look for these exclusively in the trades that I place and that you see me highlight. But when I do see these patterns forming, that's usually a pretty good indication that there's some bullish momentum to be had. And this distance between the 200-day moving average, which right now is around 67, and the 20-day moving average at a little below 60 means, doesn't mean guarantee that it's going to fill this distance, but it could mean that if buying activity really comes in and really starts to accelerate here, we could be looking at possibly $7 of upside. That's really interesting. And sometimes it takes time for that to play out. It's not immediate. It's not going to just jump right back up into that range. It's going to build. But that becomes really functional, not only for short-term trading strategies like swing trading, momentum, et cetera, but it also becomes really useful and productive for the kinds of income-generating trades that we like to place. Okay. So we'll see where things go with General Mills right now. Looks okay. It's still a little over $1.50 away from my strike price. Only a few days into it, so we'll see. We'll see where it goes. I want to shift gears here and just a few minutes and talk about CVS, because this one's been kind of fun. And Barry's got bragging rights on this one. Let's just go ahead and make that very clear here. Barry gets a great big one on here compared to me. I was assigned this stock. Let me go back and make sure that I have my dates right. Yep. I was assigned this stock here on the 1st of November at $64. So 1st of November, I placed the trade about here, selling the $64 strike. Sorry for the ugly line. And we can see that the stock just dropped right away after placing that trade. It stayed below and even picked up a whole lot of momentum, dropping down to about $44 to start the year. This is a really good example of kind of an ugly trade. And the kind of thing that you have to be willing to decide what you're going to do with, and that challenges this more passive approach that I take, right? This absolutely does happen. And I'm not saying this because in retrospect, because I get to say, "Ooh, hey, look at the way that it's rebounding right now." That is cool and that's nice. But this kind of decline all the way into this range, that's a $20 difference from where I was assigned. $15 for Barry, so it doesn't hurt quite as much. But that's a little bit of a gut punch. You have to decide what you're going to do. You're going to have to review financial statements and decide if you think that the stock's fundamentals of its value proposition are still strong enough to justify holding those shares and being patient. Now, that's clearly a decision that I've decided to make, and that's not to pat myself on the back because the stock has picked up a ton of momentum after the latest earnings report. By the way, there was no way to predict that was going to happen. I haven't parsed through the numbers, but Gib, I think you're right. The market has clearly taken this information and it's really running with it. And after that, here is Monday, here's Tuesday, and here's Wednesday. Here's yesterday. I was able to talk about it, right about placing a covered call trade. And today it's topping a little bit. Looks like it might retrace a little bit. That's kind of inevitable, right? When you see this kind of a strong rally, at some point people are going to take profits and it's going to have to retrace a little bit. That's just going to be natural. But that did set up a nice covered call opportunity for me that I was able to place this morning, selling the $66 strike price for about $1.46 for a 7-day trade, 2.28%. That's nice. I like that. This is where I've heard people say that gaps and parabolic rallies are like gifts. And that's what this is, like a Valentine's Day gift. Showing me a little bit of love, and that's kind of nice. My trade on this one won't expire until next week. So LRCX, which I assumed I was assigned around the same time, I'm getting called out of that one today in all likelihood. Looks like I'll probably hang on to this one at least another week. We'll see how far it retraces. If this is profit taking, this could force the stock to sell off a little bit and retrace back against this momentum a little bit, possibly maybe get a little bit below 64, but I don't know. We'll see. We'll see what happens. All right. Well, those are all of the currently open trades involving put sales or covered calls right now that I have. In the few minutes we've got left, I want to go ahead and open up the live stream and let's let's let you give me some stocks that you might be interested in. Let's take a look at them really quick. And just to keep the coward's door swinging, remember that these are going to be stocks I probably don't have a lot of information on. So I'm going to be relying on you, not a recommendation to buy or sell, but it's always nice to look at some other ideas that everybody else is having. Barry's already given us the NVDL, which is great. I appreciate that. If there aren't any others, we can go ahead. I can give you back a few minutes, and we can go ahead and close the live stream. It is Valentine's Day after all. Barry stays above the $66 mark. You'll be building $2 capital gain plus the premium. As it stands, I will have a $1 capital gain with $175 premium. There you go. And I thought about going down to 65 and getting the larger premium. That was a very attractive. But at the same time, 2.28% for 7 days, with the possibility of baking in a $2 capital gain. That was nice too. It was flip a coin kind of was the deal there, Barry. You know, you're doing pretty good either way. It's a good result either way. They were both good trades, so I picked one. All right, Barry. AUR, Aurora Innovation. He's in at 364, which means you're writing a really nice trade now. This one, again, this is a stock. You're not going to see this cross my desk because they don't pay dividends. But he's in at 364, and now it's pushing above $10. Gosh darn it. I'm sorry for your suffering, Barry. That is showing some really nice momentum right now on the upside, especially just in the last 2 days. So there's the tick mark from CVS, and there's AUR right there. So good looking trade, picking up a lot of momentum in following its earnings report, which is nice. Now, Barry, have you been able to do anything with like covered calls while you've been in this, or you've just been riding the trend? They do have some weekly options available, so looks like there are probably quite a few options for covered calls. Showed a $12 call for March 7th for 30 cents. $12 call. That's wow. March 7th. So that's 3 weeks. Oh, that's cool. Brought in about 2.5% for 3 weeks of time at 12. I like it. It's actually even a little bit higher now in terms of premium that it's offering. Last trade was 70 cents. So let's take a look here, see how much activity there is. Not any open interest, a little bit of volume. So we'll see, but that's nice. Gib, I have your Excel file. I've studied a lot. Thank you. I've built my trade file and was wanting to place it on the systems for review. Do I attach it to YouTube or Discord? Do it in Discord. Do it in Discord. That's going to be a more secure area. If you put it on YouTube, it's going to be available for anybody else to see that's on YouTube as well. So you put it on Discord. And if you want to place it for review by everybody else and by me, put it in the open discussion, please. That would actually be really cool right here in this channel. Give everybody an opportunity that's on Discord to look at it as well and see what you've been able to do. That'd be fantastic. And for perspective, everybody, when he says he has my Excel file, I've shared in the past. This is the Excel sheet that I use to do my value and fundamental analysis. So Barry trading just under 10 when I sold the call. You gotta, that's a nice trade no matter what, right? So you gotta like that. That's very cool. I like it. Just under 10. Well, it was probably yesterday. All right. I hope that helps, Gib. Please go ahead and do that, and that'll give us an opportunity, not just me, but everybody else, a chance to see what you're doing, which would be great. So, all right, everybody, thank you so much for your time. I do appreciate it. I hope you have a wonderful Valentine's Day. Do something nice for your spouse, and have a great weekend. If there's anything that comes up during the week, please reach out to me. I mentioned the areas in Discord or on Substack, whatever you prefer. Email me directly, rebelincomesystem@gmail.com. Otherwise, we'll talk again next week. Thanks, everybody. See ya.